Alrighty, let's get started. Firstly, happy Taco Tuesday. Hopefully everyone is doing great. Today is going to be some beef city for me. Oh, yes. Oh, I love beef so much. Last week on Taco Tuesday was Chicken Taco Tuesday. But still, you can do Taco Tuesday in many, many different shapes and forms and varieties. Okay, so, well, I hate to really break the news, but Santa Claus may not be coming to town this year. We still got a lot of redness, and yesterday in the pre-market, today right now it's actually before the pre-market. It's 09:13 a.m. Eastern Standard Time. Here on the East Coast. So yesterday we were green in the pre-market. And it just was a very, artificial kind of feeling. Kind of like a lot of people were, one, going to be taking profits as soon as market open. Two, a lot of shorts, pretty much doubling down, getting in to definitely a lot of beaten down stocks. Or just stocks in general. Or a lot of people just weren't buying yesterday. Today, in this very much kind of stalled, I want to say, pre-market, it doesn't feel, it feels everything is fake. You know, well over a decade ago, I'm not sure how many of you all actually have been on YouTube. One YouTuber that I ended up watching many, many years ago, 2009, 10, and 11, was Ray William Johnson. He did a show called Equals 3, basically reviewing funny video clips of people. And one of his favorite things to say was fake and gay. It's pretty ironic because he was actually his roommate was also gay. So no, it's definitely not offensive to say fake and gay. Well, maybe it depends who you ask. But regardless, the stock market right now seems very fake and gay with this sell-off. It definitely does not seem real. It seems very much just a bunch of fear. I mean, these companies that I have as a long position, and these companies that I also have on my watch list that have really just had a gigantic pullback, it's all because of fear. These companies are all growing. Their growth rates are picking up. It's like you literally released earnings and people are just scared that the next quarter may not be as good as the previous quarter, or the next quarter may not maintain the same level of growth rates. When you have people legitimately asking those questions, it is fear. I made it out of 2022, and 2022 was very rough year. 2020 was when I got into the market in April, and it was really not a fearful market because you had the Federal Reserve plummet interest rates to zero. You also had an election year, so you had the Trump administration doing everything in its power to really boost stuff up. You had stimulus checks going out left and right. Well, what is happening next year? You have the Federal Reserve to our back and is our friend because at any given time, the Fed can plummet interest rates down very quickly. Interest rates are very high. If we were in a backward scenario like 2022, I remember when Powell came out saying, hey, we have to raise up interest rates, the stock market, believe it or not, rallied. And then sold off tremendously. We're kind of really seeing the opposite happen. The stock market pretty much gets a interest rate cut, which is very bullish, and then we end up selling off. it should not be like that, but there's just so much fear. The market right now, for the last couple years, has been very inverse. We get bad data in the economy, the market goes up. We get good data, the market goes down. So today's data was just really kind of it's very interesting because we have been waiting on this report, and this is obviously data from the government shutdown here. U.S. employment rate came in hot, like super duper, like really hot, like way above. Now the thing about it is that Powell said last week, "Do not trust the data." We can understand why, because obviously our unemployment rate has ticked up. Does that mean that essentially we are experiencing a temporary unemployment like rate up because of the government shutdown? More than likely, this is the case. The Federal Reserve has gave their projection for unemployment data going into 2026, and it is extremely lower than what it is. I believe the lowest in 2026 is going to be 4.2 is what they're projecting. But Powell essentially said, hey, don't trust this data. So I guess a lot of people kind of really, and the market is really pretty much stagnated right now. We got to really see what happens here at the open. 6 minutes into recording. Might ramble on for a little bit, so maybe we'll catch the open here. But definitely like these videos and subscribe for more content if you're new. Gonna try and make Monday through Saturday type videos for you all. We'll be getting to SoFi and AMD here momentarily, along with my Bung profile challenge, public profile challenge. But going more on this data, I can understand why Powell pretty much said, hey, don't trust the data. The real question is that, are we going to rally from this point, like, up now? Are we going to have a Santa Claus rally, or are we not? Because you can look at this data and you can basically pretty much say, okay, government shutdown produced a lot of BS, a lot of nonsense. We got FedGov, Waller. I believe he's pretty much for interest rate cuts. Don't quote me on that. He's either for cuts or he's not. I can't remember which one Waller is. But regardless, whenever like Fed governors do speak, they can sway the market. So tomorrow is going to be really good listening to some speakers. Then you got Thursday, initial jobless claims. You got CPI. And this is where Powell said, hey, don't trust it. But you would really think if our employment ticked up because of the government shutdown, does that mean people are spending less money because of the government shutdown it affected? Or maybe we're going to be showing kind of a hot CPI because of a lot of spending. There are so many different ways to really analyze this and look at it and consider it. But right now, I mean, the market has somewhat, I want to say, held off in the bleeding. I've been up since 5:30, so it's definitely the selling carried over to this morning a little bit. And if anyone is ever unsure about where to get information, and by the way, I say this in just about every single video. I'm not a financial advisor. I'm just some random dude, small fish in a big pond. But I do have more knowledge than I feel the average retail investor here. Definitely when it comes to technical analysis, definitely when it comes to fundamental analysis. The vast majority of investors, believe it or not, they don't even listen to conference calls. Like, they just kind of really do what they hear is like a popular thing. It really makes you wonder how many Wall Streeters do the same damn thing that are probably all jacked up on substances and also escorts. But still, if you're ever unsure about something, you can always look definitely to the AI that we have today. This may be 100%, this may not be 100% accurate, but it's pretty damn close. Because if you go ahead and watch other like very large YouTubers, whether they are 9, 8, 7 figures out there, everyone is saying the same exact thing, and when everyone's saying similar things, it tends to be fairly accurate. Economical weakness, the labor market, sell the news event, buy the rumor, sell the news. That's essentially probably what we saw with the rate cut. Shift in market leadership, yeah, that's definitely a possibility. Uncertainty on future cuts, yes, that's very big. AI bubble concerns, that's the only BS one that I really think is on here. Because I really feel that we are in a bubble, but the bubble is going to be growing over like the next decade. The dot-com bubble started in the early 90s and didn't pop until 2000. A lot of people are comparing us right now to the roaring 90s. I'm in 1988, so obviously wasn't invested in the market, but I do remember, like, as a young lad, definitely even before puberty, I do remember the sentiment was phenomenal. My family were buying houses, pretty much my family members that had been renting for a very long time were buying real estate. A lot of people were just making money, like in every single aspect. People felt great about the economy. They really did. And the sentiment has been beaten down in the last couple years. It's like everyone just doesn't feel like anything good about our economy. This is my thesis, my hypothesis. Morning water, cheers. Already 16 ounces deep of some luxurious homemade pumpkin coffee. Woohoo! Oh yeah. I actually had some health issues last year because of fucking sugar. Please, if you're having health issues, purge sugar from your body. You do not need you do not need to eat sugar to survive. That is, there's a lot of people that believe like you got to constantly eat sugar. No, you got to eat whole foods. That's the key to true nutrition. But during the 90s, people felt great. The last couple years, people have not. And I really believe that we're in a rolling recession. A lot of people have said this, and it really is playing out like we are coming out of a recession. So what is that going to look like for 2026? It's going to look like things are in a low rate environment with interest rates, more than likely on the second half of the year. Because if Powell does not cut interest rates the first half of the year, whoever gets in is going to be political. I hate saying this for anyone who is a very large Trump supporter out there, but whoever gets into the Federal Reserve is not supposed to be political. It's going to be political. You're going to have midterms coming up. You're going to have aggressive rate cuts, and a lot of money is going to be funneled into big tech because of midterms advertising. And that money is going to be dispersed in many aspects. I am very happy getting into Meta. And I'm actually, if Meta experiences any type of weakness, I don't really believe this gigantic candlestick that was the other day. To be honest, I really wasn't watching Meta. When was this? Friday? But I know Meta was definitely up. However, they just got dragged significantly down here. But I mean, if Meta does trend back down like below 600, like I honestly may pick up a share. On my bung account, my public account challenge that I'm doing here. Where are you? Oh boy, hold on 1 second. My recorder is being a nasty a-hole. Where are you? Ah, there we go. Okay, so obviously this account a little over a week ago was just below 38 grand. So we definitely do have a lot going on here, and obviously to be down by about like almost 10% because of fear. To be honest, I'm actually surprised it's not down a lot more. But then again, the vast majority of these buys were on the dip, not at all-time highs. Big difference here. But I do have some capital left to really deploy. Burpees, excuse me. The account challenge is going to officially start January, but picking up another meta share is going to be fairly expensive unless I actually deposit more money into here, where I very well may. If we sell off, especially into next week, probably going to push this account up a couple grand because I want to accumulate shares. Because if we experience a massive sell-off in the first half of next year, I am deploying more money into this sell-off. If we experience a sell-off into Christmas, I'm deploying a little bit more money, not as much. If we sell off early next year, I could probably deploy maybe anywhere between, on the low end, 5, on the high end, 15 grand, maybe even 20. This account, I deployed 25 grand over the last month. Last couple weeks, bought nearly 30 grand worth of stock on 25K, almost on here. A lot also on my private profile too. But if we experience a nasty push down in the next, like, it's buying opportunities, in my opinion. So on the chance that we do not get corrected in next year, this may be it, people. This may be the last hoo-ha of fear before we go into a very, very bullish risk-on environment again. And it's very possible. But if Meta falls, I mean, it's fear. It's one of those things. Same exact thing with AMD, the chip now. On a lot of these companies, we are getting close to the bottom that we created back a couple weeks ago. So are we going to retest this bottom and then from here we basically rally? Or are we going to sell off harder? Anything is up in the air. But pretty much, it's kind of ironic. Palantir is actually still holding its ground. Go figure, right? Good on everyone being Palantir. This one is actually shocking to me. Robinhood is actually getting a pushback. Meta is holding pretty decently here. Adobe, we are up on Adobe. First time ever Adobe. It's holding its gains after earnings. Honest Company is the only risk-on play here. Amazon, we basically see probably looking to want to really retest this double bottom. Wow, down to the 200. Amazon. So many people are scared of their AI platform, AWS. Don't be at all. Nvidia has definitely rebounded to where we bottomed a couple weeks ago. PayPal, I honestly may open a position here. PayPal is very much being beaten down. Tesla, I'm pretty much just watching. SPY in the major indexes are really holding. The Qs, though, are definitely lower than SPY. And as for the IWM, the Russell, this one is pretty much a shocker. NASDAQ is basically, we ended up going as low. Ooh, I guess this was early. Yeah, this was probably early today when the market first opened. And then we have Bitcoin basically kind of really holding some bottoms here. The VIX, obviously the VIX is nowhere even close to where we were a couple weeks ago here. But overall, going forward, this is where, as a kind of a matured trader and investor, I want to say, you just got to keep saying it out loud, and you just got to keep reminding yourself, this is what happens when there is fear in the market. When there is just fear in the market, you have great stocks being beaten down. If you're a long-term shareholder, you buy shares for the future. You buy shares for the investments. And if you're a trader, you buy the dip, you buy the fear, you buy the blood, you sell the rip. And I mean, yeah, that's my philosophy, and that is what made that is what has made me into a profitable trader. I got to cut a check to the IRS for 2025, but it's a good feeling because when you cut a check to the IRS, that means you made money. So it's a crappy feeling knowing that your money is going to a bunch of cocksuckers, but it's also a good feeling as well too. Okay, so future outlook. SoFi. SoFi has not really just SoFi is and this is what Kathy Wood. Give me a friggin' break. Okay, Kathy Wood in ARK has been wrong many times. If you want to know what, let's actually what is Kathy's ARK market cap ARK? I think it's this one, ARK. If you go ahead and look at ARK is significantly up, but as for this, you want to know what? I have actually not looked at this in a very long time. The fact that you could have taken keep the number simple. If you were to had bought ARK back in February of 21 at its high of 160 something bucks, you were to take $1,000 into ARK. But if you were to go ahead and buy SPY back in Feb 21, you're talking nearly a double, like 80%. So the fact that Kathy Wood, like a lot of people pay attention to Kathy Wood, she just has money. I've actually looked at Kathy Wood's trades and I've said to myself, what the hell are you doing? She has been in and out of SoFi, in and out of Tesla. She bought SoFi for a little bit, held on to it for a couple months, sold it. It's like, yo, what are you kind of really doing? Like what's your strategy per se? Because she's kind of really all over the place. So it's kind of really comical that that's pretty much what we see for some of these like bullet points and stuff here. But as for SoFi is like just it's pretty much like a self-fulfilling prophecy if you really think about what SoFi is doing. SoFi's team is executing, they're growing. We see that Anthony Noto is still on vision, and Anthony Noto has still said, hey, our tech platform Galileo is very under appreciated right now. The rate cuts coming in for the future is going to significantly drive everything higher. So with SoFi, it's like the company just needs to execute. Where the stock price goes to, the stock price is going to go to. There's a lot of people that just you also really got to look at where people are coming from. I have tens of thousands of dollars invested into SoFi, but yet notice how I am not putting out price projections and putting out massively insane dumb numbers. Can SoFi be $100 if they continue to execute? Sure. How long is that going to take? Years. Can SoFi double in the next year? Oh yeah. Why? Why is it a better chance of SoFi doubling than tripling in the next year? Because we are entering into a interest rate cut environment, and SoFi has operated in a high interest rate environment. If SoFi can grow and operate in a high interest rate environment, what can they do in a low interest rate environment? A lot of people are forgetting that. So this has to be said to calm a lot of nerves of a lot of people that a lot of people that are running around with their heads chopped off. They bought all the way up here, probably, or near it, or maybe they bought like last week in the $30 range. Obviously, on this profile, I have the vast majority of my SoFi shares I bought at Liberation Day low. Um, Even though my Robinhood position has been cut down because a couple weeks ago, or actually a little over a week ago, not even 2 weeks ago, my Robinhood position was over 20%. I think it was at 25%. Now I'm down under 10%. I'm not panicking to get out of Robinhood because it's fear. People are fearful of Robinhood's growth. I'm now negative on AMD again. I may pick up maybe another AMD share. Maybe it's honestly maybe depending what this market does over like after CPI tomorrow, I may deposit more and buy more AMD here. I honestly may look at some leap options here for SoFi and AMD. Meta, like very comfortable. Honest, risk on, which is kind of hilarious, up 12%. In Adobe, first time Adobe buyer, up 12%. Fear. So to really calm nerves, especially around SoFi, because yesterday was a very bad day for SoFi, and a lot of people were just very fearful. Another thing that is very much being talked about is Japan raising interest rates. Why does that matter? Because it means a lot less liquidity from money flowing into the stock market. A lot of hedge funds, a lot of people have taken out loans from Japan because their interest rates were so damn low over the last couple years. And you need money to constantly be coming into the market to keep stocks up. A lot of people don't understand that. It's a rigged game. We're making money with the devil here. Like, you need money to prop up stocks. But it honestly looks like the market is really liking this data. Even though, because it's pretty much inverse. It's only, the market's been only open for 10 minutes now. It's 0940. However, yesterday the market was green pre-market. Now we are red. Now we're green market open. We were red pre-market. So we can understand now why Powell said don't trust the data. Unemployment ticked up. So we definitely see that. And we just gotta wait. It's so, we get bad data, and it's like it's unreal. Now stuff is not super green. It's not like we're getting a 5% rebound on SoFi and AMD here, but still, it's obviously we're getting above. We are getting above where we basically sold off yesterday. Why didn't I buy more shares on SoFi? And I'll go ahead and finish closing this. I own SoFi shares out the wazoo. I own 1642 SoFi shares on my main profile. My average is $7.41. Like it's almost like a 300% gainer. You always got to factor in, what if you're wrong? And I do think about that. Although, if I am wrong on thinking that SoFi is going to be like potentially a 10x stock in the next 10 years, okay. Sure, whatever. Either way, if I'm wrong and SoFi is a 5x stock in the next like couple years, I still make money. But it's very hard to see SoFi ultimately failing 100%. Going bankrupt, going down to zero. If we do enter into a nasty recession, that's where you got to really trust your management team to get you out of there. And if you trust the management team and the management team gets you out and you're buying shares in a nasty recession, like let's say SoFi goes down to $10 during a nasty recession. At that point, I mean, you could be a very pissed off, frustrated investor, sell out, and on my, I mean, I'd still make, I'd still be selling out with money on my main profile, but the answer is really why. If you trust your management team to get you out, that gigantic push down is just going to be buying opportunities. So that's really my overall spiel, how I'm feeling. I myself am very happy we're experiencing a fearful market because it's fear and it's what people are scared about that's really driving stuff down. You got to consider that we're not in a broken like area in anymore. It's not like 2022 soaring high inflation. Rates need to come down. And as rates come down, this market should just be fine. Definitely rambled on here significantly. I'm watching AMD right now definitely get closer and closer to 200 bucks. So more than likely we'll definitely see if this little pop is artificial. Could be artificial. We could sell off in the ass end of the day. Who really knows? But let's keep it real and just stay positive and pretty much see what happens. All right, everyone. Once again, if you enjoyed this video, definitely smash the like button. I'll see you all with a new one tomorrow. Later.